The final jobs report of 2025 is out. The report shows employers added 50,000 jobs in December, falling short of expectations, and the unemployment rate fell to 4.4% after November's historic high. This is the first report released on time since October's government shutdown paused data collection. It's also the first report since the Federal Reserve tried to boost hiring by cutting interest rates last month. Our Elizabeth Schulze is here with a closer look at those numbers. So, Elizabeth, on the one hand, you have this low jobs number. On the other hand, the unemployment rate fell. So what does this say about the economy right now?
Yeah, a little bit of a mixed bag there, Diane. That 50,000 jobs added in December was below expectations, and it does confirm this overall cooling in job growth that we saw for the year of 2025. The unemployment rate coming down to 4.4%, that is good news. We had seen that rate at 4.6% in the month before. What that rate is all about is how many people who are trying to get a job and can't find one. So we want to see that rate going down. Right now, it's coming off of that 4-year high. When you kind of dig into the details of this report, Diane, what it shows us is that there are a couple of sectors really driving job growth in the economy. One of them, and this has been the case all year long, is healthcare. There were 21,000 jobs added to the economy in the healthcare sector in December alone. Almost 2/3 of all job growth last year was from healthcare. And then another big driver last month was restaurants. So that's typical in the month of December. You see a lot more people out celebrating the holidays, food, restaurants, bars hiring more people. But notably, when you look at those job losses, the retail sector actually did cut quite a few jobs last month. That is very unusual for that time of year, especially when you're thinking about general merchandise stores, warehousing. So we're going to have to look into why exactly that was the case for the month of December. Also, Diane, manufacturing, 8,000 more jobs lost in December. This caps off a really tough year for manufacturing jobs when you're thinking about kind of the overall economy. And big picture, when we look at job growth in the overall economy for last year, which we now have kind of the full picture of, this is, as one economist described to me, a frozen market. We did not see a ton of firing. Losses did not fall off a cliff, job losses, but we're also not seeing those kind of blockbuster hiring numbers that we had seen for many years coming out of the pandemic.
So could this lead to another rate cut?
You know, we do have the Federal Reserve looking so closely at these jobs numbers this year. In the market, the initial market reaction, you're seeing futures trade slightly higher in expectation that this does pave the path for another rate cut from the Fed. The Fed wants to see the job market stay stable. It does not want to see a further weakening. And so rate cuts would kind of help support that. But at the same time, you do still have prices above where the Federal Reserve wants them. Wage growth is still higher, and that can contribute in some ways to higher prices. So this likely keeps the Fed on hold for its meeting this month. We're going to be looking at kind of the expectations for Fed meetings from there on out. A lot of economists, analysts say that the next likeliest possibility for a rate cut, Diane, would be at the Fed meeting in March.
All right, Elizabeth Schulze, thank you.